Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Zoom video. I was just telling Kevin before we came back on air, this stock at the end of October hit an all-time low post going public, below 59 bucks a share. They've got $6 billion in cash on their balance sheet. Free cash flow is positive. It's a profitable company, Megan. Do you guys have any data that says maybe the market's kind of overlooking the fact that, it's still a decent company here because the share price hasn't reflected it?
Yeah, I think that heading into earnings, expectations are fairly low. I think revenue growth is expected to be in the single digits. And when we look at this name, traditionally, whenever you first probably learned about Zoom, you're thinking about video conferencing. But I think the key is that now moving forward, Zoom is trying to be much more than just video conferencing. It's trying to be a solution to help businesses with all types of internal communication and help those teams work together on a hybrid level. And then also, even expanding into potential, contact center use cases. And so whenever we look at this, one thing that we've seen recently is, Zoom is trying to up its offerings and leverage AI. So you can think of this as like video call summaries and things of that nature. And, is this moving the needle? Well, when it comes to overall mention buzz, we see buzz growth is down about 16% year over year. This is just a loss of momentum. This isn't necessarily a new name among these consumers, but I guess a positive sign of this is we are starting to see that decline flatten out a bit. If you look at that blue line, you're starting to see that decline kind of taper off. So I think that could be a potential positive. Whenever we look at web visits, people who are going to Zoom's website to learn more about the solutions that they offer, those visits are down by about 11% year over year. And this is actually a slight improvement versus where they were a quarter ago. So I think that if anything, we're starting to see some a slowdown in the rate at which that growth is slowing, if that makes sense. And so that could be positive, but just from an overall happiness perspective, and whenever we look at other players in the universe, whether you're talking about Microsoft Teams or Slack, we see, Zoom still has some ground to make up.
Megan, this company seems to be doing well with large customers. That was up 10% year over year. The direct-to-consumer was the one that's struggling, and that's probably a lot of little accounts. Megan, how can this company, they have, Tom mentioned, they have free cash flow. They have $6 billion in cash, and their cash flow went up by $330 million last quarter. So they're making money, and they're saving cash. They're getting into AI. They're looking at acquisitions. What else do they have to do? What can they do? Obviously, over COVID, when they got so popular, that was destined to fail. But what's the next thing for them? Or is it just they're not the fast-growing company anymore? Now they're a slower-growing company.
Maybe it could be a little bit of both. As you mentioned, I think they are working on growing those big companies or bigger accounts. I think that they have over 200,000 enterprise consumers. And so one of the things that I think could help them are potentially those partnerships. I know that's sometimes hard if a larger company is already integrated with Microsoft, or already integrated with a larger firm that offers a Zoom-esque solution. Zoom has to have a platform that's so powerful that it encourages, the switchover. It encourages that, okay, we'll add on this additional agreement or partnership or this additional account. And so I think that that's something that potentially AI and these new services and these new tools that Zoom is releasing could really help to do. But whenever we look at overall happiness levels, we don't necessarily see Zoom at the top of the pack. We actually see them trailing. Whenever you look at like a Salesforce, they're trailing Salesforce by about 11 points from a happiness perspective, trailing Microsoft by about 5 points from a happiness perspective. Still decent levels of happiness. I think it's around 63, 65% positive, but still trailing the larger peers. And so I think that these investments in AI, I think they're partnered with OpenAI and also investing in Anthropic. That could produce fruits. I don't necessarily know if it's this quarter, though. We're still seeing, somewhat of a decline in the metrics that we're tracking.
Yeah, and if you look at that, you know, the mentions count still far below or far above the stock price. So we know that gap can stay there, Megan. But you have an earnings score going into this with that gap being so wide. But it seems like that's been the trend over the last several years.
Yeah, so heading into earnings, our score for Zoom is a +5. So that's still positive, but not quite enough to put us firmly in the bullish camp. I do think that you can make a case for that if you think that expectations are really low and that Zoom is going to have some positive traction from the investments that it's made over the last quarter.
All right, this is definitely going to be one to watch, see if that trend continues, because still negative on the year. All right, great stuff as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio.
+5, we'll take it.
+5.
It's positive.
Yeah, it's not a negative number. That's
right.
like maybe neutral on their scale.